All right. We are live. Live on all the socials, live everywhere. All right, let's get started. Hello, Smart Money Tree podcast listeners. Welcome to this week's show. My name is Kirk Chisholm. I'll be your host, and today I'm joined with Doug Hagren. Hey, Doug.
Happy Friday, Kirk, and happy to the most lovely day of the year, and probably the most cheesiest day of the year. By the way, see if you can understand. I got this new shirt from my wife this morning. Can you see what? Can you see the
Oh, she loves you, Doug.
And what does that mean? I'm
Is that a
wearing
whale?
my heart on my sleeve.
Nothing cheesy about that, Doug.
Nothing at all. I didn't catch
Nothing
it
at
at first. She gives it to me. She's like, you should look through it and see if you can, you can catch what's on. And I'm looking, I'm like, okay, it's got the whale. She's like, come on, you don't see it? You're wearing your heart on your sleeve. I'm like, oh, well, to all of you out there, now you know I am the sensitive man that I am. I am wearing my heart on my sleeve, and it's not just today because I don't just do it for Hallmark. I just want to make that clear. And by the way, for those of you that I don't know if it still exists, Kirk, do you remember Sweetest Day?
No, was that ever a thing?
Well, it was a thing for a while. So we had Valentine's Day, and then there was, then they came up with Sweetest Day, which
Isn't that a
was
song?
Yeah, right. It sounds like it. It's nope. It still exists. Sweetest Day is Saturday, October 18th, 2025, and it was an original American holiday, not traditional, that I believe Hallmark created.
Of course.
And of course, everybody dived in, and Hallmark sold plenty of extra crap that nobody needed. But, again, it's February, and by October, you probably, if you haven't done so, you probably need to tell the one you love that you love them. So it forces you every 6 months to remind them that they mean something to you.
Yeah, it forces you to overpay for roses, overpay for dinners, to fight for dinner reservations 1 year in advance, to buy overpriced stuff for Valentine's Day. Nothing wrong with the holiday. I'm. It's funny. My wife is more tied to the moment. Like it's meaningful to do it at the day, and I'm like, I understand. And for me, it's just like, how about I just do really cool stuff for you, just some other random day, just for no reason. It's kind of like, and so we got difference of opinion, which I know a lot of people obviously do in marriage, but I just find it funny how like Hallmark basically created this holiday, and it has become just a spending boondoggle where you overpay for everything because you have to. And it's just, I hate the fact that I have to overpay for stuff just because someone told me that this is the day I have to do that.
Yeah.
Like they don't overcharge you for Christmas. They don't overcharge you for Thanksgiving, but they sure as hell overcharge you for Valentine's Day.
That's true. Where's Black Thursday? Where's Black Thursday?
Yeah, Black Friday, Cyber Monday. That's a discount.
Yeah,
not for Valentine's. Actually, the discount
chocolate went on sale this week.
After Valentine's Day. Tomorrow it'll go on sale. And the problem is, well, it's not as meaningful after. I'm like, yeah, but it's a hell of a lot cheaper. If it means more to spend more money, I'm happy to do it. But just like,
if you want to fight inflation, then make sure that you time your shopping earlier.
I like that, Doug.
Yeah.
I like that. We're fighting inflation. Shop after Valentine's Day, not before.
Right. Especially, hey, we've talked about this. Cocoa prices are through the roof. They're one of the most expensive things. Guess what? Starting tomorrow, cocoa prices are going to be extremely cheap in most retail stores around America, especially if they're shaped like a heart.
What's funny is I remember when I used to work in the city, I was in I was at PaineWebber before they were acquired by UBS. And we were in the first PaineWebber office, 265 Franklin. And I'm not sure if they're still there, but at the time it was like literally the original PaineWebber branch. And so every day I would take the T from Somerville to the financial district, and I would walk from where the T was. You'd have to come above ground. You walk through a few buildings because in the winter it's really cold, so it's literally a straight line, and it happens to be through these buildings. So there's this huge like traffic jam of people cramming from the T through these buildings in the winter, which is kind of funny in of itself. Like I'd be pissed if I owned that building. A lot of foot traffic. Anyway, so along the way there's this like, I don't know, there's the walkway. Then you kind of go through this alley. At the end of the alley, there's a flower vendor, just a guy with flowers selling flowers to people on the way to and from work. Well, to work, he sells them. On the way home from work, they just sit there. He at the end of the day, he just kind of like leaves them there. You can pick them up for free because if they don't buy them, they're dead. So, he gets them probably some deal and sells them and probably makes good money. But at the end of the day, they're literally just sitting there. You can just pick them up and bring them home to your sweetie if you want because they don't cost any money. So I just always found that fascinating. Like, yeah, they fight inflation. Just buy them after work instead of before.
Yeah, absolutely. And, that works with bakeries too. The things don't last. I'll tell you the best hamburger buns I ever had, and then we'll get focused here. Whether you love the place or not, Fuddruckers. Fuddruckers back in the day used to be really good when it first came out of Texas, and they would bake their buns every day. They were like a roll. They were about this thick, and you could go in at the end of the day when they were closing down shop because they didn't use preservatives. And and sometimes you just go up, say, hey, got any extra buns? And they give me a bag of them for free. Yeah. Right. I'd go home, make my own. Now they started to get wise to that and they started selling them, but they were like 10 cents on the dollar and they were fantastic. So that's kind of what we're getting in here. But I still want to say this for all you listening. We're talking about Valentine's Day. Sweetest Day, that's got to go away. That was created by a corporation just to force us to buy more stuff that, of course, if you're going to put a holiday behind it, and what is the whole thing? If it's kids, if it's weddings, and if it's funerals, the price is going to go up by multiples every time.
Well, what's funny is if you think about the way things used to be versus where they are now, I mean, things have gotten a lot more efficient. I remember when fast food restaurants used to pay people to come and take away their grease, right? Like that was the thing. You'd have somebody pick up the grease. I mean, you can't just throw grease down the drain, right? So they come pick up the grease. Well, it turns out you can use grease for biodiesel, renewable fuel. And there was a time, I think it was probably like 20 years ago, where I was talking to somebody about this as an idea, like just going to, it was like right when it started, I was like, this would be cool. Just go to all the restaurants and say, hey, we'll take it away for free. Then you take it and then you use it and you sell it to other people and they use it, the waste, and turns into fuel. I'm not sure how they do that. It just seems kind of weird, but I think as a lot of things change, you see things like that. It's just kind of interesting. So I don't know. I mean, we're growing up, people were pretty efficient with their stuff. Now I feel like everybody's just wasteful. They just buy stuff because everyone's got plenty of money. Even though it's tight for a lot of people are still really wasteful, ridiculously so. And it's, I growing up, it was always kind of like disgusted by it and like, oh, people are just so like they just buy stuff and then throw it out. And it's like, why do that? It's like, all right, should you use a towel to towel off the dishes, or should you get paper towels you just keep throwing out? Like, it's like, anyway.
Kirk, I don't know if you know this, but in this day and age of mail order purchasing,
that annoys me.
But most of the stuff that you return, so people are like, oh, I try it on, I return it. Did you know that? And don't quote me exact, but I believe it's somewhere close to 70%, and it might be higher or lower than that a little bit, of the stuff you return, if not more, they just throw out. It is more expensive to put it back on the shelf, repackage it, and sell to you than it is to just discard it, write it off, and throw it in the trash. And that says, and again, most of those materials that we have these days, and is plastic waste. I actually have a visual on that, which I didn't post today. So look what we're doing. It's crazy.
Yeah, it's interesting because I know Amazon will do this if it's under a certain amount, and they say, "Oh, well, this is wrong. You sent me the wrong thing. Oh, just don't bother resend. Just keep it because it's more expensive to send it back." So they just say, "Just keep it." I can tell you, I've gotten a lot of great gifts from Amazon in the last month. We got a cast iron skillet that uses for the new stoves. I forget what they're called, not the convection stove. The convection stoves, where they like heat up really fast.
Yeah, the magnetic one. It's what's that called? I'll think of it in a second.
Yeah, but you know what I mean. So it has, and it's equipped for that. We never bought one because we're like, yeah, whatever. We can't use it on our stove. And it came, and I'm like, wow, this thing's awesome. Like it's our favorite pan now. We use it all the time. And it was just a free gift from Amazon. Just we didn't order it, just showed up one day. Like it was to us, it wasn't someone else. It just showed up. I'm like, okay, thanks Amazon, because a frequent flyer mileage or something. But yeah, I mean, I think the waste. I'm not sure what the real answer is. I mean, my son did get a 3D printer for Christmas. That's what he wanted, and it's interesting when you think about most of our manufacturing processes like removal, and so there's a lot of waste. And when you think of like 3D printers, which started a while ago, but it hasn't really caught on significantly, that's really more of an additive process. So it's not as wasteful. Now, obviously, it's wasteful. You just throw it out, but it's not as wasteful as just like, oh, you put down a hunk of material and then you cut out certain things and throw the rest away. This is more like you're adding the plastic to the thing you're making, which I have to say, I've had some really great stuff that we've made using it, which I'm a huge fan of the 3D printer, and I can't wait to see what happens in the next 10 years with it, because I've heard that 3D printers are printing houses now.
I've seen videos on it.
Yeah, it's very cool. I've also seen houses that show up from, I think it was a fake video, but it was like showed up from Amazon, which may be true, but it was basically just this compact thing that you expand out and it turns into like a small mini house, but like a house. You could buy it. So I'm really curious to see what happens with housing in the next 10 years, because there's a lot of new technologies coming out that are just going to be absolutely fascinating, especially for generations who don't need big houses. I know baby boomers and Gen X are big into the bigger houses, but like, I don't know. I don't feel like I need a big house. Like, put me on the top of a mountain with a view and a small house. I'm happy. Like, I don't need a big house. But I think that trend may be changing. We'll see. But I think as we have housing shortages and we need to rethink housing, I think it'll be really interesting. I mean, if you look at like Japan, housing is really expensive there, but they have like tiny like condos or apartments, because it's just so expensive. So and you see these videos of how they've found ways to compress all these rooms into one. So you could take like a kitchen and like stuff folds away and then it turns into a bedroom and folds away. It turns into a living room. Like, that's really cool. I don't know if I want to live there, but like, I love those videos to see like how you can turn a room into different things and really modulate it. I know, I mean, this part of the country in the Northeast, we're all old Yankees and there's a lot of old homes here. But like, if you think about it, it's just kind of a cool idea. And so I'm really curious how housing is going to be rethought. This kind of gets into a topic I want to run into, and Doug and I are going to talk about. So we're going to segue into a lot of the changes that are happening. And I feel like I really want to talk about the markets, but frankly, the markets are boring right now. Even though there's stuff going on, it's not a lot. There's more interesting and related stuff going on in politics. We're not going to talk politics, but we are going to talk about the relationship of what's going on to the financial markets, because I feel like every day Trump puts out another executive order, and there's stuff going on behind the scenes. There's stuff coming out, which is people are getting overwhelmed by it. But I will say a lot of people are actually, even people on the left, are starting to buy into it, because they're starting to realize like, you can't fight this. This is a seismic shift going on in our country and in the markets, which we're going to talk about the market piece. So there's going to be a lot of changes coming, and I feel like every day it's something new and it's hard to keep up. There's one thing that I've heard about, and I'm going to share it on the show. You probably haven't heard about this before. Some of this has been announced, some of it has not. But if anyone's aware of Bretton Woods Agreement, this is basically the New World Order that was created around the dollar. And it was I believe it was in New Hampshire. Bretton Woods up in New Hampshire, I think, is where it happened, in a hotel. And I believe so. But anyway, so the point being is the dollarized world was started there, more or less.
Mount Washington Hotel in New Hampshire, correct?
Yeah, in New Hampshire. So it's called the Bretton Woods Agreement, and there have been a lot of agreements that have happened over the last 50 years. There was the agreement that we had with Saudi Arabia, which is effectively that they would keep oil prices low and we would provide them security in the region. And so there were a lot of those that expired, I think, 2 years ago, or maybe it was 2023, I believe it expired. So that no longer exists. So we have a reshaping of the New World Order where you have all these old agreements that were really valuable, decades ago, in part because of the Cold War with the Soviets, in part because, there were, the world was a different place. Now that the world is quote unquote more stable in many ways, or at least people are a little bit more comfortable in the arrangements. And so when you see these agreements, this new agreement, I think, is going to be really interesting, and it's going to reshape the global world order in many ways. So I want to kind of walk through it a little bit and talk about it. It's still not widely circulated. It's still not widely understood, and there's still holes. I want to be really crystal clear. It is probably well known to the people involved, but it has not been clearly communicated. So what I'm going on is what has been communicated, plus what I've been hearing behind the scenes from some other people who are kind of sharing some of their thoughts. But basically, it's sort of being called the Mar-a-Lago Accord, because this meeting that happened to discuss this initially was held at Mar-a-Lago, of course, because of Trump. And so I think it's for branding, good on Trump. I mean, it's like secret branding because the Bretton Woods. Everybody talks about Bretton Woods. They're going to be talking about Mar-a-Lago for the next 50 years if this thing goes through, which I expect it probably will, because he's got a blank slate to do whatever he wants. So, but it's still speculative, and it's still kind of how people are referring to it. But basically, if you think about the different arrangements that have happened globally, the U.S. is in a very unique place. The U.S. is the policeman of the world. We are the world's reserve currency, and along with being the world's reserve currency, it gives us a lot of power and control over other countries. However, it also has a downside, which is we have to run basically up a big debt. So we are a debtor nation because we're the global reserve currency, and we do that because we like the power. You could agree with the fact that we're doing it or not. It's irrelevant to the conversation. The people in power for the last bunch of decades love power, and they want to keep it, and they want to shape the world in their own image. And so that hasn't gone away. That may change now. We'll see. But the point being is we were the policemen of the world, and we would tell people what to do, and they would accept it because we protected them, right? Europe, NATO. Hey, NATO, you don't like it? Well, defend yourselves. Go ahead, put some troops in the front line. Don't use ours. Oh yeah, use your own money. Oh no, U.S. Yeah, we'll follow whatever you say, right? And that was basically us. We'd walk around with a big stick and we'd beat people with it. Do our bidding. Do what we tell you to do, right? And you see all these wars that have happened is partially because of that. It's like we want something and you're gonna do it. And if you don't want to do it, well, there's a war, right? Look at Ukraine. We started that. I mean, people on both sides might agree or disagree, but if I had to guess, we started that. We kicked sand in Putin's face, and some people are more into the history of this than I am, so I'm not going to get into the details, but my understanding is basically we kicked sand in the face of Putin. We decided to, Ukraine was supposed to be a neutral country, and that was our buffer between us, NATO, and Russia. And we decided, you know what? Screw you, Russia. We're gonna try to impart our power on Ukraine. And Russia's like, screw you. We're just gonna go attack Ukraine. And so I think we started that, from my understanding of it. But regardless, we decide what happens, and the whole world decides that they're going to go along. And the ones who don't are the ones that are powerful enough where they don't have to. Like Russia and China, they don't have to listen to us. They do their own thing. But generally speaking, we have this big club that we walk around the world and beat people with. And that is effectively the US dollar, right? If you think about these emerging markets, most of their debt is denominated in dollars. So if our dollar gets too strong, they can't pay it back because they're basically, let's use this hypothetical example. So let's say, I don't know, let's say Congo. I don't know if this arrangement exists. I'm just picking out a country, okay? Congo has they have some debt. They have some they borrowed money from us. It's based in dollars. And let's say that our dollar appreciates compared to the Congo dollar. Well, what happens? They have to pay that money back, but the problem is the dollars are now more expensive. So let's say the dollar doubles compared to the Congo dollar, the Congo currency. Well, now they have to pay twice as much for the payments. Well, that's ridiculous. So the more the dollar appreciates, the harder it is in all these other countries to pay back their loans. So they're going to struggle because they can't make the payments. So the cheaper the dollar is, the easier it is for them to make the payments. So we have control over that, in part, not completely, but in part, we have control over that currency exchange. So the strength of the dollar, the weakness of the dollar impacts how things work in the world. It also impacts economic competitiveness. Everybody wants a weak currency because if you have a weak currency, you can sell more to other countries, right? And so big corporations love that. So you have all these challenges, right? So I'm going to summarize the Mar-a-Lago Accord really briefly. So if you look at it really comes down to kind of like three different pieces, is at least my understanding of it. So there's three pieces to it. One is tariffs, one is a sovereign wealth fund, and one is a reimagining of the security agreement. So let's take each one of these, and then I'll hand it off to Doug to get your thoughts. So the first piece is tariffs. Tariffs are basically leverage, right? It's the club that we use to beat people with. You either do something or I'm going to tariff you. Mexico, you better defend your border or we're going to tariff you 50%. What happened? Mexico sent all their troops to the border, right? Canada, you better do the same or we're going to tariff you. Okay, Mr. Trump, we'll do that. We'll make you the 51st state if you don't comply. So that tariffs are our leverage to do that. They also raise revenue. Trump talked about the External Revenue Service. I'm not sure if that was just, marketing, but I hope we don't add another government agency. But if you think about it, like it is a way to raise revenue and it is a way to balance out global trade. So if we feel like, all right, our people are getting short-ended, okay, France, you were going to tariff you in this way, but we'll also accept you tariff us in another way. So there's usually some exchange. It's not usually one-sided when it comes down to it, but it's a start in the exchange. The second one, the Sovereign Wealth Fund, we had somebody on talking about this a while ago, and I think it's a potentially great and potentially dangerous idea at the same time. I don't really particularly want to give Democrats a big pool of cash that they can use and create another slush fund like they did with USAID. And I'm picking on the Democrats. I know it wasn't always the Democrats, but lately it has been. So I know the Republicans at one point probably had their hand on the till, but at the moment it's primarily Democrats. So they're going to take the brunt of my anger. Anyway, so the Sovereign Wealth Fund is basically what they talked about was monetizing assets of the United States. Now, what are assets of the United States? Well, that's a good question. We haven't really talked about that, but here are some ideas. What do we own as a country? Well, we own a lot of gold. We own about close to $1 trillion in gold, about 900 billion. So $1 trillion in gold that is valued currently on the Treasury at about, I think it's $48 an ounce on the Treasury, or in the Fed. I think they put that down as the value. So it's completely undervalued. That's their cost basis effectively. So we have gold, not enough, but that's a start. What else do we have? We have real estate. What do you mean real estate? Well, here's what we have. We have a lot of federal land. That federal land is worth something. Why don't we put the federal land in the Sovereign Wealth Fund? And then in there, we can lease out the land, right? We're leasing out drilling rights. We're leasing out land for farming or whatever we do. Like there's a whole bunch of, there's land all over the place. We showed it last week. I think it was 85% of Nevada is owned by federal government. So we've got a ton of land around the country. That could go in there. People have talked about, well, what if we had TikTok or what if we had tax credits and we give a tax credit to a corporation and then we get a piece of the company. I don't particularly like that. I don't want us getting involved in private business at all. I don't want, the problem is even if this government is a saint, the next government won't be, right? Is any government you create, you have to create it with the respect of the next government. You have to assume they're going to be corrupt. Who knows who it is, but you have to assume that because at some point, if it's not the next government or the government after, at some point, some government will be corrupt. And you basically just set them up to create a boondoggle. So I think in some ways, I'm a little scared of the Sovereign Wealth Fund. I think it's an interesting idea, but we're a debtor country, so it's kind of hard to imagine we're going to put assets in when we don't have any, when we have all this debt. So that's an interesting piece. And the last one's the 80-year security agreement, which has been talked about. So one thing that's been talked about is that these countries that owned U.S. Treasuries that we're paying interest to, right? So we have interest on our debt is the largest line item in the budget, I believe, at the moment. Just beats out defense spending, I think. You can't really get rid of that, right? It's there. There's nothing you can do about it. So what can you do? Well, here's what you can do. You offer these countries who were basically beating with a mallet, you know, we're going to protect you. In exchange, you're going to own our debt. Okay, that's fine. So what can we do? We exchange that debt that's paying interest for debt that doesn't pay interest. Well, why would we do that? Well, because we told you to, because we're going to protect you. And, you know, as Trump said, you've been getting a free ride for too long. Now we're going to make you pay your fair share, which I think is fair. It reduces our power to tell people what to do, which in some ways is good, in some ways bad. But we still provide protection. We're just not doing it for free. So the cost of protection is basically interest-free debt that you're going to hold. And they also said, well, you can provide a line of credit, so debt swap, so they can always exchange, but they have to hold on to it. That's the deal. So what that means is you could probably cut interest on our debt significantly. Now you can get back to a balanced budget, because the two things that keep us, or three or four things that keep us from a balanced budget: interest on our debt, defense spending, Social Security, Medicare. Those are the things that are really hard to cut. I love this idea. There were people that have written papers on this, so it's not, you know, like there have been some papers written on this. I forget the people who did it. Maybe Doug knows, but about these ideas. I think it's a brilliant idea, because our deal with Saudi Arabia was basically we provide you security and you provide us with cheap oil. So what's this security? It's the same thing. We provide you with, you know, you put your debt with us for no expense and we'll provide you protection. So we can fund our debt for free, and it doesn't cost any money, and we'll provide protection like we continue to do. So it doesn't change the world order that much, but it does enough to reduce our expenses. So everything I'm hearing out of the Trump administration, I know the liberals, the Democrats who are listening to this are going to want to hold their ears. But everything I'm hearing out of the Trump administration right now is gold. Now, it probably won't always be that way, but I'm loving everything I'm hearing. Now, I'm not 100% convinced in all this. There are some holes in this. There are some answers I don't have. But from what I'm hearing, I like innovation. This is an innovative idea. All of these are innovative ideas. Most people, they wouldn't think of this, right? Obama tried to come in and cut stuff. He couldn't do it. Everybody tried to do stuff and they couldn't, because they're all bound by this system that has gotten overly corrupt. Trump is basically like, let's take a sledgehammer to the system. Let's start over. I love that kind of thinking, because that's how solutions happen. They don't happen by doing the same thing over and over again. That's what we call insanity, right? Doing the same thing over and over again, expecting different results. No, you have to change the system. And that's what we're doing. So I love the fact this is happening. I haven't seen anything terrible that I don't like yet. There's some things that I have questions on for sure. That, you know, it's still early. But I love the direction. I think this is a wonderful idea. It solves a bunch of challenges. I know it'll be rocky. I know there'll be speed bumps. It's not going to be smooth sailing. And you have to understand what we're doing as a country is going through a restructuring. We're restructuring our debt. We're restructuring our country. If you go into bankruptcy, and I want to point this out, so all of you who are freaking out by all the stuff Trump's doing, I want to remind you something. If you own a company and you file for bankruptcy, what happens? They go through all your financials and they decide how much debt you can support. They go through your income and expense, and they decide how can we cut some expenses. And they say, all right, we're going to cut these expenses so you can balance it out, and we're going to restructure the debt. We'll take a haircut on the debt, but you'll keep paying, and we're all happy. That's what happens in not a liquidation, but in a restructuring sort of bankruptcy. That's what this country is doing right now. We don't call it this, but we've talked about this in the show before. What are the ways to get rid of our debt? You can default, you can restructure, which is basically default, you can inflate, or you can grow out of it. Restructuring and default are the same. This I like. This is a healthy default because you're not defaulting. You're not getting rid of debt. You're just saying, hey, we're getting rid of the interest on the debt. 100-year paper, 0%, and you're forced to take it. That's gold. That is absolute gold. And I love the fact that this is an idea. I don't know if it'll happen, but I love the idea, love the innovative thinking. And kudos for all the people that are coming up with this. I know not all the names are public, but I know Scott Betts has been a part of it. And I think there's some other people who I can't recall their names. So apologies to them for not giving them credit. But there have been some papers written on this. So if this happens, love every bit of it. But we will have, and by the way, one last piece. In a restructuring, there are always losers. Always. There is no restructuring where there isn't a loser. Could be the person who loaned the money, could be something else. Always losers. We have to keep in mind that there are going to be losers in this. But what I like is it's not Joe Public. It's not Doug and I. It's not the people listening to the show. We're not the losers in this. It's other people that are not us. It's not the people who've been stuck with the bill for the last 50 years. And everyone benefits who's in power, and the only losers are the ones that don't have the power. That's been happening for a long time, and I see this as a trend, which I like about Trump, is that he's actually fulfilling his promises that he's going to take care of the little guy, not the big guy. And I think that to me is a huge win. So what do you think, Doug? We just went over a lot, but what do you think about all the changes?
Well, so let's start with the key advisors. I think you were talking about. You mentioned Scott Bessent. Others are Stephen Mirren and Zoltan Pozsar.
Yep.
They're big into that. I want to get into a couple of numbers, things that you had mentioned. So you talked about the gold, the sovereign wealth fund, the gold reevaluation. So we have about 8 tons of gold valued at an outdated 42 an ounce, which you mentioned. Revaluing it to market prices of $2,900 an ounce could generate $800 to $900 billion for the government. They're also talking about Bitcoin holdings, which which I don't, how much I was kind of looking at some stuff. I don't know if you addressed that. We currently possess around 207,000 Bitcoin, which is roughly about $12 billion from seized assets. There's been some speculation on whether or not the government could use Bitcoin reserves to back the US dollar. One of the concerns on that would be the volatility of it. For all the, for all of the, the Bitcoin bugs that are out there, the hodlers, there's no argument that Bitcoin valuations have been all over the place. And it's, and so there's some concern about whether or not it's stable. Going back to the global security commitment, so one of the proposal would be that NATO countries would pay 5% of GDP on defense. So that flowing through, flowing to U.S. defense contractors. So that's going through private industry on the defense side. Again, if this goes through, then as an investor, hint, hint. Now, at the same time, again, not a recommendation, but again, that's where the money would flow that they're proposing. They're also looking, as you mentioned, that debt swap agreement. And of course, if they refuse, that's where tariffs come in as retaliation. They're calling it the Mar-a-Lago Accord. Now, this is interesting because there are past economic shifts that have occurred before, and these happen about every 30 some years. We've talked about this before. There was the 1971 gold standard removal. There was the Plaza Accord. What's interesting in some of the the potential outcomes, obviously, is this global trade restructuring, increased inflation and higher interest rates. There is the possibility of geopolitical tensions if Europe resists Trump's demands. And it is definitely in line with what we are starting to see in a lot of places. If you look at what's happened in Italy and other nations and down in Argentina, there has been a massive shift towards populist economic order. So let's talk about some potential market impacts. Obviously, the uncertainty and the dollar devaluation could drive gold prices higher. We're already seeing that, but is it directly related to this is the question. There's a lot of things that may be driving gold, but there's probably some speculation going on in this. It's also, continues to make what has been, already an issue over the last couple of years, but bearish outlook for bonds, because there is the potential of higher interest rates, which would make borrowing more expensive in general. They could potentially lead to stock market stagnation. If you get high valuations, rising interest rates, that could lead to lower equity returns. And Europe's economic transformation, if they're forced to adapt, they may deregulate and innovate, which, Europe has not been known necessarily for moving into the innovation space. They've largely been extremely stagnant when it comes to innovation, going back to a lot of historical types of decision making as a continent, and amongst the nations, because they do have a lot of that national long-term pride. The issue, a couple of things that it could do, obviously, is fundamentally reshape the trade, military, financial policy. As I mentioned, the risks of inflation are certainly there. So, but here are some of the pros, right? A reduction in U.S. debt. Okay, if we can revaluate gold and bring it to current pricing, that 800 to 900 billion in assets makes a shift on debt. You talked about the sovereign wealth fund, and you mentioned the government-owned land. Okay, and that could also offset national debt. And then there's the debt restructuring in NATO. One thing I see as interesting in all of this is that if we have these countries that are forced to take on our debt and invest in our debt without any payments, we don't have that cash flow burden. That is a deficit issue. But it also, though, makes those countries, one of the things we've been talking about, again, questions around the Saudi Arabia and whether or not the gold, dollar was going to be the back, for U.S. Oil. The issue is how is the U.S. losing its influence? Well, if these countries, for their defense, which we have continued to come to to their support on, are now going to have direct investment forced over 100 years to be in our bonds, they're going to potentially be a lot more sensitive to doing things or making decisions that are going to be against U.S. best interest. So that certainly, so you want our help, you've got to be thinking of our best interest too, because again, if we don't have the best interest there, we're certainly not worth us taking and putting this money, into your defense. But at the same time, if you're hurting us economically, you're going to pay for it, because we're not paying you for this debt. There's no risk. The benefit to you, and this is how debt works. You pay an interest rate to have debt, to take on the risk of carrying it. Well, they don't get paid on that risk. They have to basically trust that the debt that they bought in the U.S. government is going to be a long-term safe asset, with nothing more than just the reliance on or the promise of us to support them. So that's going to potentially make countries less interested in doing things that are going to be against our best interest. It could, these Trump tariff policies could pressure countries to make trade concessions. Again, that could benefit American businesses and jobs. It could, obviously, if the middle class is paid enough, which is the idea behind this approach, that could resonate very well with voters, especially those that might have been affected over years of deindustrialization. Obviously, if they're paying us, contributing 5% of GDP to defense, that shifts the burdens away from us, which has been extremely costly. It ends what's called the free rider program problem, which countries relied on that protection for decades. It could create some stock market shifts. So be aware. There could be more investment in U.S. companies. If foreign debt restructures that lowers treasury yields, then investors may rotate more into equities or hard assets. And again, I talked about some of the issues that that could happen in innovation for Europe, which could actually be, potentially beneficial to them. However, keep in mind there's other areas, like there could be inflationary risks, driving up costs for consumers, supply chain disruptions. We went through that, with COVID for several years. You could also see a push up in interest rates affecting mortgage rates and credit costs. And if the cost of capital rises and global tensions escalate, stock market could actually stagnate or even decline. So this doesn't necessarily mean that it could be all positive to us. One thing that is interesting, I want to talk, and I don't want to, wanted to make a point of, is if we go back and look at, there's been, the different economic shifts that have been, that have occurred over the years. And I said about every 30 to 40 years. One of the things that is in line with Trump's plan that actually align, it was the same as the previous. I just blanked out on the name of it. The not Bretton Woods, but the Plaza Accord. Both of those were intended. Now, Plaza Accord was a coordinated effort to absolutely devalue the U.S. dollar. Okay? It was intended to do so to fix trade imbalances. By the mid 1980s, the U.S. had huge trade deficits. We used to talk about that in the news all the time, especially with Japan and Germany. The dollar was too strong, and that made our exports expensive. It made imports too cheap. And what it did, it of course, Japan, Germany, France, and the UK and the US to all agree to devalue our dollar. Our exports became cheaper. That improved trade. It helped correct global imbalances. But what came out of that? It triggered inflation. And we dealt with that in the 80s. Inflation was, continued to be extremely high coming out of the 70s for, until we got into the 90s. But the idea, again, was what's more important here? Let's boost U.S. exports and reduce debt pressure. If we want to look at a comparison, to the Mar-a-Lago Accord, obviously the trade and tariff leverage, using that to renegotiate trade and security deals, the sovereign wealth fund monetizing gold, Bitcoin, and government assets to create that revenue, and the debt restructuring for those allies is also intended to do the same thing, and that's to lower the dollar's value to make our exports more competitive. So if you're seeing a pattern here of what they've been trying to do for several of these global orders, devaluing our dollar. Again, we're looking at, people say the dollar's weak, and that's why we have all this debt. We're pushing and devaluing the dollar. The fact is that hasn't happened. Over the past 40, last 30 years, it had a nominal effect. If we go back past that, they were facing those issues. So we have continued, the dollar has continued to remain, for the most part, extremely strong, which has created a lot of challenges in U.S. exports, and ultimately it has created issues with that U.S. debt overall. So I want to just summarize this up. What are the potential risks of all of this? Triggering inflation. It could be like we had with the Plaza Accord, price instability. We could get foreign nation resistance. That could lead to back and forth economic retaliations, tariffs, reduced dollar reserves. And if the U.S. countries do reject it and shift U.S. treasuries, that actually could be a reverse effect of the intent here. And instead of strengthening U.S. financial dominance, there is absolutely the possibility that it could weaken U.S. financial dominance. So, there's always the possibility of a backfire with anything like this. And by the way, just leave it on this. So what have been the major historical shifts to global economic order? I talked about the Plaza Accords. But really, if we really break it up, there was the gold standard from the 1870s and 1914. Bretton Woods occurred in 1944. We ended the gold standard in 1971. The Plaza Accord happened in 1985. China entering the World Trade Organization in 2001 was a major shift. Then we ran into the 2008 financial and post-financial crisis and pumped millions, trillions of dollars into the system. But now, the question is this new order of 2020s that started with COVID, accelerating that debt spending, supply chain disruptions, raising concerns about global economic resilience, rising tensions that have occurred between China, Russia, and the West, which do suggest the verge of another major restructuring. And the question is, if this goes through, is this the next major turning point? And I know there's going to be people that have questions about whether or not this is part of 2025. I want to turn this back to you, Kirk, for a second. And we can come back to that if we have time. But it is not directly affiliated with Project 2025 because that wasn't written by Trump's campaign. But there are some alignments to many of the goals.
Well, I think, the Project 2025 thing, I think people just need to get over it. He's come out and claimed that he had no part of that. He doesn't agree with it. He didn't even look at it. I think, the challenge that we have is we have corporate media that is brainwashing everybody, and they have been for decades, both sides. And I want to be clear, this isn't a Democrat, Republican thing. They've been doing it. The Fox has been doing it for Republicans, and the Democrats have MSNBC and CNN. So corporate media has been brainwashing people for a long time. And if you don't know that, you turn off the news and social media for a week, and then come back and it'll be really obvious how much they're brainwashing you. I mean, it's ridiculous. So I think, when you hear things like that, 2025, it's like, look, just get over it. Yeah, I think the healthy thing, because Democrats lost so badly in the election, and they're still trying to pull their own shenanigans. And frankly, we just need to get rid of the boomers in there, the boomer politicians that are in the Democrats, the boomer politicians that are in the Republicans. Just get rid of them all. I mean, like literally, like they're just there for power and money, and they're using the same playbook. Get a younger generation there, like Gen X. My generation doesn't want the power, and they're the ones probably should have it. But regardless, I think that what the good thing is people are starting to wake up and say, all right, there's a lot of good stuff going on here. It's not all bad. They might still not like Trump, but he is a different person than he was 8 years ago. And I think the results are very positive. I think most people see the benefits of what's going on. Like I said, I don't expect it to be 100% great. I expect there to be good and bad, just like, Biden, who I thought was a walking corpse. But, not everything was bad. Like, there was some really shady stuff going on. But there's some good stuff too. So everybody has goods and bads. But I think people just need to wake up, because the thing that I want to impress upon everybody here, and I know we talked a little bit more political stuff than normal, but I think what you need to understand is we're in a unique period. Okay, so if you look at our country in decades, in certain decades, there's a certain like cultural shift or theme that goes on, right? There was, it was the baby boomers, like Vietnam, right? Vietnam was a big culture shift. You had, you had like the 90s with like technology boom, right? And then you had the 2000s, which is kind of a mess in many ways. But you have all these cultural shifts that are going on. What you're seeing now is I'm actually excited to experience. Because if you think about like after World War II, a lot happened, right? A lot of people were happy. The war was over. People can go back to their lives. Everyone was excited. They were celebrating. It turned into like boom times for, our country and other countries. And yes, there was a lot of disaster prior to that. But of course, it was rebuilding and countries rebuilt, and it was all positive, right? It's like a forest fire. After the forest fire, trees do grow again and plants do grow again. So, it's the same kind of thing. And I think what we're seeing now is an opportunity, which we had an unsustainable, let me bring up this chart again. We have unsustainable debt. Like, we're not at the point where it's completely unsustainable, but we're borderline. You can't ever pay this back, and you can barely even, we'll probably get into hyperinflation at some point. Here we come, a unique perspective. And I don't care if it's Trump or Musk or whoever. It's an innovative perspective, and I like innovations. Some of them work, some don't. I don't have all the details on this, but I see this chart right here, and it shows this is the U.S. debt that is that's meant to be paid back this year. $9 trillion, 9.1 or 9.2 almost trillion dollars in debt maturing this year. Doug, do you have that in your piggy bank? Do you have $9 trillion just laying around? You can pay that off? Because I misplaced my wallet, but I don't think.
I have 9, but the zeros are a lot less than they're asking there. But I could do some tenth of it.
Yeah, I got 200 million right here. Yeah, I got a 200 million Zim dollars. Maybe they'll accept that.
Okay, good. Yes, is the Zim dollars fine? I don't know what the conversion's very very strained right now, but at least you. So I have the 9 in dollars, and you have the 0 in Zims. We put those together. We'll see what we come up.
We're good. Yeah, we're good. We're good. But I wanted to share this because here's the thing. So this is what we were talking about before of extending the debt. So look at this chart. If you guys are just you audio viewers, just hear me out. So this year we have about 9 trillion. Next year we have just shy of 4 trillion. That's 2026. 2027 is about 2.5 trillion, and then 28, 29 or 2 trillion, and then it tails off really, really low. Mostly the short-term debt, obviously. But what I think we have a very unique opportunity to do is we have a unique opportunity to take that 9 trillion or somewhere thereabouts and extend it out 50, 100 years, where it's not due for 50 or 100 years. And then we have no interest on it. Think about the impact. Let's say we have the largest line item for government expenses is interest on the debt. And let's say we just chop off 80% of that. Now all of a sudden we can balance our budget. We can become a more prosperous nation again. We can focus on things that are going to focus on growth and not just, paying for obligations that we had 100 years ago. Like, it's like Social Security, for instance. Like, I don't know if people know this. Social Security, when it was invented, it was created to take care of people who were at a very extreme age. It wasn't meant so that we can retire early and sit in our hammocks drinking margarita. It was meant for if you lived, like, take it to today, because the average lifespan back then was much lower. And I don't know what it was in comparison now, but the average lifespan now is about like 74, 76, depending male, female. Let's say in comparison, that would be the equivalent of if you lived to 85 or 90, you would qualify for Social Security. It was meant for like a very small portion of the people. So if you live to 90, you can get Social Security. Well, what do you do prior to that? I don't know. You keep working, right? Like, there were certain things that happened that I'm not suggesting we do this. And that's not the point that I'm saying change Social Security. I'm saying we have to change Social Security. But here's an old system that worked at the time and now doesn't work because it's going to bankrupt our government, because not only is it used by virtually everybody, because back then it wasn't, it was used for a very small percentage of the population, but now it's for virtually everybody, and they tax your Social Security. You pay in your whole life, and then you get a Social Security check, and then they tax it as if it's income. Are you effing kidding me? So that happened, I don't know, like 20 years ago or so, that they started taxing it. I mean, it's crazy. Like, what kind of buffoonery is that? So I like the fact that what Trump said, he's gonna get rid of taxing Social Security and tips, like tips for waiters and waitresses. I think that's a smart move. But I'm not talking about the balancing the budget, but just like concepts, like, really, like, do we need to tax Social Security? You worked hard, give your money to the government, they're giving you a very poor return, and now they're going to tax you again. It just seems wrong on so many levels. So I would love to see that system change. And I don't know how you change it, but I'm sitting here on the edge of my seat waiting for the government to say, here's a really cool, innovative idea. I don't know what it looks like. I didn't think we could balance the budget or even come close. But now that I see the Mar-a-Lago Accords, I'm like, wow, that wasn't even on my radar. I'm impressed. Like I said, don't know if it works. It's lacking detail, but I'm impressed. So I'm sure there are other innovative people out there. And by the way, if you have innovative ideas, I highly suggest going on X and sending them, or tweeting to people like Musk and other people in Doge. Tweet the ideas, give them to people. They are literally accepting ideas from people. They had a webpage during the campaign, which I forget what it was called, but it was Policies for the People. That's what it was, Policies for the People. And you could go on there and suggest ideas. There are tons. If you go on there, there's so many cool ideas that people put up there. And I don't know if they're going to take them, but Trump's a populist president, and he's going to listen to what the people say. So if most people agree, he'll probably do it. But look at it, Policies for the People. Like, you can suggest an idea. Who knows if they'll do it? But I would say it's probably a good idea to suggest something. And so if you have innovative ideas, like we've interviewed some guests on the show with innovative ideas, and we're going to try to get some more, just to come up with a concept and talk it out, and hopefully get the interview in the ear of people who might have some power to consider these things. And we are in such a cool, interesting time in government. You think of tech in the late 90s, that was a cool time to be in tech. Like, everything was new and different, and all these ideas. It's a cool time to be in AI right now. So much new invented, like, really cool. This is, now, if you're in government, you probably don't agree with this because you're losing your job, probably. But I think if you're a government wonk, if you're really interested in government, this must be a really cool time to be in the weeds of what's going on, because there's so many widely, there's so many implications to all of the things that are going on. Like, and there's second orders of effects, right? There's the direct effect of it, and then there's the second order of events, right? There's the unintended consequences. So that stuff's going to happen, and I get that, and I don't like that, but that's normal, and we have to think that through. But these ideas are happening, and they're given consideration. So I think it's exciting, even if you don't like it. It's exciting to see cool and different ideas. Like, I don't agree with everything they're doing, but I'm sitting here like, all right, we'll give them some rope to hang themselves, and let's see what they do with it. So I think that we're going to see a lot more. I'm going to mention one more quick thing before we give it to Doug to wrap it up. But there is I'm trying to share my screen here. I want to share the markets for last week. So these are the markets for the last week. Here's what's happened. If you missed it, you didn't miss much. So one of the things that, taking this again back to finance and investing, one of the things that we need to keep in mind is that we have extremely overvalued markets, and at the same time, we have a lot of disruption going on, and it's not all going to be good. I do expect some very negative outcomes for this, so just keep that in mind. But at the moment, we see some goods and some bads. There's definitely some stuff there that we need to keep in mind. But the markets are kind of creeping higher, but I wouldn't get overly excited yet, because there's a lot that can happen, and they haven't laid out their entire plans yet. So I think I'm still in the cautious optimism stage. I love the fact that, we got some companies that are doing really well. There's definitely some that are not. If you look at the aerospace and defense, they're not doing great. They're not doing terrible though. Drug manufacturers, not doing great, not doing terrible.
Now, Kirk, that could change if they start running all of that global money through those defense contractors.
Well, here's the thing. As I'll give it to Doug, but here's the thing. Every time we think and here's the defense sector, it doesn't look great. Every time we think there's a bad sector, right? When Obamacare came in, people were like, oh my God, the medical system is going to implode. It's going to be terrible. Who did the best? Hospitals, medical care across the board. They just went up. It's like when Obama got elected and people said, oh, the gun stocks are going to get killed. They did great, right? Because everyone out and bought guns. So I think we have to keep in mind that whatever we think is going to happen, there's usually a second order effects, which is unintended, that we should keep in mind that some of these sectors that are poor, they might actually still make a lot of money, because instead of us paying for NATO, maybe they're forcing Europe to pay. So they're still getting paid. I don't know what the arrangement is. I'm just saying, keep in mind, don't just throw out sectors just because, Make America Healthy Again is in there. So all of a sudden the drug companies are going to go zero. They're not. They're still going to make a lot of money. They're still doing good things. They did a lot of bad things, but there's still some good things. So just keep that in mind. Anyway, Doug, let's wrap us up here so we can take it home.
Yeah, so I've got some great things we can talk about another week. I've got some really interesting, because a lot of people I know are talking about the tariffs and all this global stuff that's going on. It's really interesting because, again, for those that have been fearful of the tariffs, there's a lot of data out there that show the tariffs have been held against us as a country for a long, long time, and they've not been reciprocated at near the level that countries have held to us. So I think next time, Kirk, we can get into a little bit further when it comes to, a discussion and clarity of around where the impact of some of those things are and some of these decisions that are occurring. But for now, what I want to talk about is we don't know what's going to happen here, right? I talked about some pros and cons. One of those pros and cons could be one of those cons could obviously be the increase of interest rates, the increase of inflation. And again, one of the pros could be we could have some reprieve on taxes here, because if we're charging more to foreign to countries, then there might not be as big of a demand to have taxes go up on us. We've been in global lows, we've been at historical lows in the United States on taxes for decades. And if we go back to historically where taxes have been at times, they've been as high as 94%. Why am I bringing this up? Because all of this is going to be potentially good for certain people in certain scenarios and great outcomes. It's also going to potentially create some challenges in other areas. And the biggest thing that you can do is to plan to be in control of your money and plan to be able to be in a situation in which whatever occurs, you're going to have maximum flexibility. How do you do that? You do that by figuring out where you have the potential risks of inflation, the potential risks of taxes, the potential risks of losing money unknowingly and unnecessarily in the things that you do. As people know, I focus on college planning. That is a wealth transfer. You're talking $150,000 potentially over a 4-year period. The price used to be a house. I'm not sure you can find one this way anymore, but over a 4-year period, that's 3 cars. Okay. So how do you pay for that? And what's the impact of it? The true impact of that cost becomes compounded when you start thinking about what that 150 could have been for you if you had kept it and used it in other places. So financial planning is about understanding where your money is and how those different things can work for you. And when I look at families, I find $2 to $4 million on average in wealth transfers that are occurring unknowingly and unnecessarily. College is one of those areas that leads to it. How you save in retirement plans is an area that leads to that. The taxes that you pay every single year leads to that. How you finance debt or purchase assets leads to that. And again, if you would like to not change your lifestyle, but have potentially $2 to $4 million in wealth that you can control, that starts with learning if what you thought you knew was true turned out to be untrue. When would you want to know? And if that's today, then go to one of our websites and start having a conversation about that. Mergent Advisors is our normal planning website. And of course, Mergent College Advisors is where we go and work specifically on that major wealth transfer. And that's spelled MERGENT, MERGENT, mergentadvisors.com or mergentadvisors.net or mergentcollegeadvisors.com. Check it out.
Awesome. Well, thanks for joining us, Doug. And that's the show for this week. Thank you again for joining us on Money Tree Investing Podcast. My name is Kirk Chisholm, wealth manager of Innovative Advisor Group. We don't just manage your wealth, we make your life better. You can find more about me at innovativewealth.com. And of course, you can find me every week here on the show. Please remember to subscribe to the podcast on the podcast app of your choosing. You can also check out the show at moneytreepodcast.com. On our website, you'll have access to the show notes, resources, and the archive shows. Also, check out our YouTube channel. While you're there, please subscribe and leave a comment. Lastly, please leave a share rating and comment on the podcast app of your choice. Oh, and don't forget, do your own research. This show is for informational use only. We're not telling you what to think, merely how to think about investing. We're also not selling any products or services, so do not consider this advice. If you have any problems with the show, I blame Putin. Please send me an email, express your feelings. If you're seeking financial advice, talk to an oracle or a fortune teller, or maybe just a licensed financial advisor. I'm one, but as I said earlier, I'm not selling anything, but I'm easy to find. Have a great week ahead, and remember, no one will care about your money like you do, so invest in your life.